Hi everybody, Brian Shannon here from alphatrends.net. It's Friday the 20th of February 2015 and it was another bullish week for equities. The S&P 500 was up 0.7%. NASDAQ just about doubled that with a 1.38% rally, and Russell 2000 up 2/3%. Semis had a good week. Financials lagged a little bit, but we're still positive, and oil lost some ground. It's still clearly in a downtrend, and the interest rate sensitive commercial real estate was down slightly as bonds lost some ground for the week. So let's take a look at the charts and see what we have here. Last week, as I was explaining, when I say the market is innocent till proven guilty, it means we should expect the current trend to continue as long as key levels of support continue to hold, and that's exactly what we saw here, and we saw them nicely added to this week as well. So going into next week, I'm going to say that we remain innocent till proven guilty as long as we're above 208.5, and we'll look to adjust that higher as the market gives us higher highs and higher lows. But right now, this is the most recent relevant higher low in this current intermediate term uptrend, which began as we bounced from the low end of that range that we saw a couple weeks ago. So we've had 2-3 great weeks of upward momentum, and we had broken that uptrend. We had broken that resistance here, and that was a week ago Tuesday. And at that point, I said that's where the buyers are back in control of the S&P 500 and expect new all-time highs, and that's what we have here. A new closing high at 211.24. So the market, again, it's innocent till proven guilty. Expect higher prices. If you're going to sell short, look for the weaker stocks. Don't sell short stocks in uptrends. I've seen people make those mistakes, just like I see people trying to buy the stocks in downtrends, and it simply doesn't work, not on a consistent basis. So what we'll want to see first is that this prior little band of resistance from the last couple days at about 210, 210.25, that this holds as support. That's our first level, but we don't have a lower low until we break down below this area. So if we're to break below 210, it tells us we're cautious and that we're turning more neutral in the intermediate term time frame, but bearish if it goes below 208.5 on the intermediate term time frame. Longer term time frame still clearly quite bullish here, up at all-time highs. The NASDAQ gained ground, as we saw, had a much better week, in fact doubling the gains of the S&P 500. This is where we were at the beginning of the 4-day week, and we saw that just a beautiful pattern of higher highs and higher lows intraday. We started out with a little bit of weakness this morning, and as we often see in bull markets, when we have a week open and the market is above a rising 5-day moving average, the buyers often step right back in like they did today, and as soon as the buyers got it back above the volume weighted average price and pivot, you see that's where they took control and maintained control of this market throughout the day, closing right up near the highs. So for next week, when it comes to the the NASDAQ 100, we'll be looking for the bigger level down here at about 106.75 to 107.25. That's our bigger band of what we would expect to become support, and we will remain bullish and expect higher prices as long as we remain above that. So we're innocent till proven guilty. If we break below this level, we become intermediate term more neutral, and that's what I update with subscribers every single day on alphatrends.net. The Russell 2000 we saw pulled back today and touched this prior peak here. So that was actually very good to see that this prior little peak, this little area of resistance on that day, became support here a couple times this week. And that is now our key level that we want to see hold. About 120.75 to 121. That's our key band of support that we want to see hold for the Russell 2000. If we hold above that, we're intermediate term, still innocent till proven guilty, and expect the market to continue to move higher. Breaking below that level puts us more cautious, and we would have to reassess at that time. The semiconductors are obviously continuing to move higher as well, as we know they broke this downtrend line and this prior peak. I was talking about how I would prefer if we saw a pullback and then rally, but the market doesn't care what I think or what I want it to do. The market remains higher. It has not broken any intermediate term levels of support. Early next week, 56 to 56.25 will be our key level. If we remain above that, expect this market to continue to move higher. If it breaks below that, then we'll have to reassess, and that's what, again, that's why I update this every single day for subscribers. The video you're looking at is a once week free video, and you simply have to make more adjustments if you're going to be an active trader, as I am. I focus on the intermediate term time frame, looking for swing trades, and a lot of times I day trade. But this past week there were a lot more setups on the long side that were good swing trade candidates. The financials came down and tested their key level of support in here at 24 to 24 and a dime, and did hold. They bounced back nicely, in fact, today, because we had been making a little pattern of lower highs and lower lows below that 5-day moving average, but we recovered, and that's very good to see. Now, this is going to be a very important level going forward. That we want to see 24 to 24 and a dime hold as our key band of support. As long as we do that, the buyers remain in control of the financials, and this is looking like a little bit of a bullish flag that seems like it should break out and maybe continue up towards 25 and perhaps eclipse last year's highs in the financial market. So we're looking good in all of these equity markets. You have to, you can't chase and buy up here. If you want to be long the financials, you don't buy at the end of the day here. You wait for a little bit of a pullback, create a higher low, then buy the upward momentum and set your stop underneath the higher low. And of course, that is the higher low that's relevant to the time frame that you trade on. It's not the same for everyone. Let's take a look at Apple. It had a great week, obviously, and continues up into all-time high territory. So, I've had a couple of people asking me about shorting this stock, and I said, you got to be a fool to do it. It's the biggest stock, it's the strongest stock, and it makes no sense to go sucker punch the biggest guy in the bar and expect that you're going to be okay. He's not going to turn around and punch your lights out. And that's what Apple's doing to the short sellers, and that's exactly what the short sellers deserve for shorting strong stocks. I get it when I short a strong stock and lose money. I get exactly what I deserve. So it's not about being mean or judgmental. It's a fact that when you have higher highs and higher lows, selling short is a dumb thing to do. So we remain higher highs and higher lows, and Apple is clearly getting a little bit extended here. It just rallied from 119 to 129 over the course of the last 2 weeks, but it closed right on the highs. So, people who are thinking that they can pick the top, good luck to you. No one has done it so far. Not a single person has correctly identified the top in Apple. Not one single person. So, yes, you can trade the short side, but it doesn't make sense to do it when we have an intermediate term trend that's still higher. So for next week, I think you want to see basically 127 and a quarter, 127 and a half. I wouldn't be surprised if this market actually came down there and then perhaps began to correct a little bit through time rather than a deeper price pullback. Other names that we are been looking at, Amazon after they reported earnings, people go in and they say, just like, this gap lower, people bought it down here saying, hey, it's going to fill the gap. And you know what? It did fill the gap, but it took, 8-9 months to do it. And you had to experience a whole lot of pain in between. This gap, it took a little bit of time to fill. But when is this gap going to get filled? I would say maybe 6 months, maybe 2 years. So people who are shorting because they think that all gaps must get filled, absolutely untrue. They do not have to get filled. So Amazon remains in an uptrend. It's getting extended, but that's the pattern here. Is these big, strong stocks that report earnings and gap up have continued to move higher, and that's the case with Twitter as well. A lot of people are Twitter haters. That's fine, but don't short it while it's still got momentum from these earnings. We're above the 10, 20, 50-day moving average. The stock has strong momentum. Facebook had a great rally this week. Netflix continues to burn the people who are been shorting and thinking it's up too much. It's not up too much if somebody else is willing to pay more, and we've got those rising prices with higher highs and higher lows on all time frames. And on the flip side, what about the people who buy Alibaba because they think Alibaba is a good company? Maybe it's a good company, maybe it's not. I don't really care. I'm interested in the stock. It was a good stock over here as it was rising, and it's been a terrible stock all of this year and for the last 3-4 months. It's a bad stock to own. It's in a downtrend, and it lost more ground this week. Here's the 4-day action for this week. So, looking at a 10-minute time frame, you can go back and look at here's what happened the last 4 days. It's a piece of garbage, this stock is. It doesn't mean it always will be, but if they don't scare you out on the way down, they'll typically wear you out. It will take time, just like GoPro. GoPro got some, I think, I didn't read the news, but a lot of people were excited about it because, it gapped up and it did have a strong day. And if you're a day trader, you can take advantage of that type of move by looking at it that day and saying, hey, it's above the volume weighted average price for that day. Then you want to look at it and say, okay, but overall, what's the trend? We've got a declining 10, 20, and 50-day moving average. It's still a piece of garbage. It's guilty till proven innocent. It's lower highs and lower lows. They make a nice product. It's fun to use. You can do cool stuff with it. But if you're going to buy their stock, you're going to expect to lose money. It's guilty till proven innocent until it is going to wear the sellers out here. That's all I have for today. I hope everyone has a good weekend. That's actually not all I have for today. Let me talk real quick. I forgot. I wanted to mention bonds because bonds, we had spoken about those. I had done a blog post this week about them saying that, there's a lot of reasons to think maybe there's some support to be found at that 50-day moving average, and I was pointing that it was close to the 50% retracement from this November low, and here now we're finding support at the 61.8% retracement in the trend line, but people were buying it here at the 50-day moving average thinking it will become support. The 50-day moving average is where we take a closer look at the action. When it was at this 50-day moving average of 129, if we then take a look at a 10-minute time frame, at 129, this is where we had a little bit of consolidation at the 50-day moving average. And when we're looking at this intraday time frame, we see we had still a pattern of lower highs and lower lows below a declining 5-day moving average. Even today, we gapped up and we ran a little bit, but the rallies with a declining 5-day moving average tend not to hold. So bonds are still intermediate term downtrend. We've got a precipitous sell-off. There's nothing that says it has to bounce. I would expect probably next week if we get back above 128, 128 and a quarter that you would see some sort of bounce. But this is a lot of people have lost money in the last 3 weeks trying to buy the weakness here. Don't buy a stock while it's making lower highs and lower lows below a declining 5-day moving average. Don't buy stocks where it's making, where it's making lower highs and lower lows, and you have declining 5-day moving averages as well, and you have declining 50-day moving averages and 10 and 20-day moving averages. Let's take a look at one more thing real quick, and that is oil, because it plays right into this conversation that we have in here on this daily time frame. We have a market that's bounced, and it's got this declining 50-day moving average. Now, a few people got excited because it was above the 50-day moving average for a few days, but the 50-day moving average is still declining, and that's the key to remember. Now, what we're going to do is we're going to take about from this point forward and take a look at it on a shorter term time frame intraday. Each one of these candles, in fact, represents 4 hours worth of data. Now, I don't have my trend tool on here to draw with the way I'm used to, but we can look at this and see that this, if you look at these, what did I do there? If you look at these higher lows, and then we have this resistance up here at 54, 54 is really 54 to 54 and a half is a big band of resistance. I think if you break down below 50 bucks a barrel again, or maybe this low 49 and a half to 50, that this is what's looking like a lower high right here, and I would not be surprised at all to see oil come back down and test these lows down near 44, 45. It's in a downtrend. It's guilty till proven innocent. They typically don't just turn on a dime, so give it some time if you want to be bullish on oil, but now's not the time to be bullish on it.